Well, hello there.
Hey there, sir. How goes it? How are you?
Friggin' fantastic. How are you, my fine feathered friend?
I'm better than you. I know you had a little bit of an adventurous weekend. I don't know if adventurous is the right word,
It was
but
an event. It was an adventure. So Friday was the anniversary of my wedded bliss to my
mm,
wife. 6 years. Thank you very much. And so we spent most of the morning in chemo. Awesome. And then I get a call from my doctor, and he's like, "Hey, an opening came up for tomorrow. Would love to get you in for a colonoscopy."
mm.
So it went from
I'm
romantic.
sure it's exactly what you wanted to hear on a Friday morning, especially your anniversary.
Yeah. Well, and also like then you got to do the prep, right? So instead of having this awesome
Mm.
meal, I ended up putting a seatbelt on my toilet and just having the terrible night.
Peter, I'll have you know that PJ and I were communicating on Friday, and he told me about that, and I said that he was going to be able to his colon was going to be so shiny he'd be able to see his own image in it when he was done with the cleansing.
Which is kind of you because I am not that limber. So that's nice of you. Peter, how was your weekend? Clearly, tell me you didn't also do a colonoscopy.
I had nothing close to that kind of an experience. Thank you very much. I had family in town. I was at the beach. I was relaxing and soaking up some Florida sunshine
Nice. Oh, so you had a normal time. Good for you. Good
You
for
had
you.
Florida sunshine. How did you manage that? I was in Florida and it rained all the weekend.
on the other coast.
Ah, there you go. The other coast, the fancy coast.
Oh, come on. But hey, Peter, thank you for joining us. Tal, I'm kind of chomping at the bit to tell everyone about this
I think you should. Let's
fine.
do it.
So our guest today is Peter Goldstein, who is an entrepreneur of more than 30 years as a C-suite executive for public as well as private companies. He's the founder, chairman, and chief executive officer of Grandview Capital Partners, Inc., a boutique investment bank to emerging growth companies. He's also the chairman of the boards for Siyata Mobile Inc., a public company in the enterprise cellular communication space. In addition, because, wait, there's more. Peter serves as managing director of Exchange Listing, which provides strategic planning and listing implementation primarily for private companies who wish to go public on exchanges such as NASDAQ or the New York Stock Exchange. And last but not least, Peter is also a member of the Forbes Finance Council. So, Peter, thank you for spending some time with us today on the Braving Business podcast.
My pleasure, guys. Great to be here and look forward to an engaging conversation.
So do we, Peter. It's great to have you here. You've had a super interesting career. I read up on you in preparation for the podcast, and you've done various things. And I know some of our questions later today will be about that. But let's start with your beginning. What was your first entrepreneurial venture, and how did it go?
Well, I won't bore you all with, what started in kindergarten and, raking lawns and shoveling snow. But the really the most significant, I would say, entrepreneurial venture that I started was on my 24th birthday. I actually went to City Hall on Center Street and got my business license and started a food distribution company in New York, which I ran for 6 years as my first real business venture, and built it. Grew it from one account to over 300, serving fine restaurants, supermarkets, specialty produce, kind of high end, very perishable food products. And I had my first exit at 30. So I went from founding entrepreneur at 24, building and exiting my first company at 30 years old.
What got you interested in that particular line of business?
Yeah, it's interesting, Tal. I was actually starting a career in the food and beverage sector. And at a young age, I was hired and worked as beginning an assistant director and then was promoted to director of operations at the Rainbow Room in Manhattan. You might know of it, very kind of esteemed location, top of Rockefeller Center. And I had an opportunity to work for some of the greatest, operators in the New York restaurant scene. What that taught me was how to really be a great operator, efficiency. What it also taught me was that I don't want to be in the restaurant business for the next 40 years. So I made my way into seeing and learning of an opportunity to go out on my own and start my own business, which I always envisioned I would do. I just didn't know that it would come about in the way that it did, as a natural kind of segue from one sector of food and beverage to the other, which was the supply side.
Wow. So you're an excellent chef then. Is that what I'm hearing?
Well, I like to eat, PJ, but I learned from some very talented. I went to culinary school and learned some great tips along the way. But what I really have found was that, kind of my true passion outside of the food and beverage was working inside of that industry and learning how to grow a business where there was an inherent demand in something I was passionate about.
Sure, sure. So in the beginning though, you're on your 24th birthday, you're launching this. Did it all go swimmingly? Like, did you have any kind of, you run into any obstacles, any hurdles that you had to overcome, any of that, any true grit, resilience part of that?
All of it. I mean, New York City, 24, bootstrapped, undercapitalized, no formal training, right? So it was really an incredible journey, starting piece by piece. And I've always been very confident in my ability to sell myself and sell a product. So that's how it really began. And the lessons learned were really more about how to run a business than they were about how to position, market, or tell a story. So the biggest hurdle that I can remember from those days, realize it's over 35 years ago. So there's a lot of history between here and there. But some of the fundamentals that I've learned certainly was about being resilient, because this is not in any environment. Bootstrapping a business and starting it from scratch requires significant amount of resilience. And then for me, what I learned a lot about that point was adapting my vision into something that was more reality. And I think any entrepreneur struggles with that idea of, hey, I have a vision of what I want to do, and then there's a reality of here's where I am and here's what I have to do. One of those stories was that this is a distribution company, and I had started perishable products out of the back of what effectively was, a station wagon, and realizing that I hadn't planned for knowing how I would grow with refrigerated distribution trucks. I eventually had 7 of those, but it started off with, here's what I have, here's what I can work with, and then balancing the vision of, okay, I'm going to be in Manhattan running 7 trucks. What's the reality of how to build that infrastructure? And that was part of the bigger lessons, one of many that I've learned over the course of the careers.
Since you were in Manhattan, oh, I'm sorry, PJ, I spoke over you. Go ahead.
Nope, go ahead.
It just so happens I had a business in Manhattan. We distributed fresh flowers over there. And one thing we did not take into consideration was there's no place to park. And we eventually needed to build into our budget a line item for tickets because we were getting so many of them. Did you run into that, Peter? I mean, how did you deal with that issue? I mean, that's one of these weird issues. It's an example of an issue that you just don't think about, and then it ends up being a bane of your existence. I mean, it was costing us so much money. We needed to factor that into the cost of flowers.
Well, the first time that a vehicle gets towed and there's perishable product in the back, not only do you have to pay for getting the vehicle out and pay for the expense of the labor, I lost product on my first time, a significant amount of money in the back of the vehicle. The other variable with New York is the average speed limit is like 7 miles per hour, right? So, we ended up putting a second driver in almost every truck. So we used a runner. So when we couldn't find parking, because there variably isn't any in Manhattan, we would find a spot, guy would run, delivery completed, on to the next. And that caused an efficiency in our delivery mechanism. It wasn't planned that way, but that was a hard lesson learned after we experienced, the challenges of running 7 trucks in the city.
Wow. And I'm also in distribution. Like my forte is shipping. So you're speaking right to my heart. Did you, was there a pivotal moment or decision during this time that you feel like kind of was shaping your path for the future, or like was the foundation from everything else, launching from?
One of the pivotal moments was, so the way this came about was that there was really one primary supplier in New York City who would have been a competitor that would gone out of business. And so I had gone and was sourcing product for the chefs that I work with to the West Coast of California to meet with the growers and the farmers of all these kind of high-end specialty products. And they really reinforced the understanding that there's a very big market here and that we needed that kind of farm. This was before farm to table was fashionable. And that aha moment of we're really taking product directly from the farm, putting it in shipping containers, bringing it to New York City, and providing some of the best restaurants, and certainly in America, maybe in the world, with what was, a farm to direct way before anybody was talking about farm to direct.
So you raised the point that I think is worth delving into. You said you had one competitor and then they went out of business. Is that right? Did I hear that correctly?
Correct.
Did you anticipate that, or was that a surprise?
That's actually what led me to start the business. We knew that they were struggling, and they were the only supplier then actually to the Rainbow Room where I was working, and I was part of the procurement side. So we knew that there was a void in the market, and the chef had talked with me about finding alternatives. We couldn't find anybody. So this to me is almost like business lesson 101. You want to start a business where you know that there is a demand for whatever it is, product, service, technology, as opposed to coming up with the greatest idea of a widget that then there's no market for. So this was really a market-driven opportunity, which gave me that fundamental thinking of I've probably started or been involved with, dozens and dozens of startups at this point, is looking for that market product match and making sure that there really is a strong set of assumptions that can be met in bringing that product and scaling it and growing it to satisfy a need in the market.
Yeah, that's it's such a great point. I recently was speaking to students at the University of South Florida, and the point I made to them, the topic was, what are the kinds of businesses that people should be starting nowadays? And the types of businesses people should be starting nowadays, Peter, and I'm sure that, well, I assume you will agree, are businesses that are making something that already exists better. Providing a service that accelerates or improves some value that people need and want and are willing to pay for now, not something new and exotic. Now, there are some businesses and some business people whose forte, I would say Elon Musk is an example of that, whose forte is bringing something to market that doesn't exist at all. But for most businesses, the surest path to success is finding an opportunity that is clearly there and then going after it in either through being innovative, doing something more cost effectively, delivering better service, or some combination of the three. What's your reaction to that?
100% agreed. I mean, I follow like an adaptive leadership model, which is all about adaptability and innovation. It's what's right in line with your thinking. I'm not as smart as the creators that can bring a brand new product and or service to market. So I'm with you. I'm with the find something where you can add inherent value to your customer, your client base, right? And then continue to adapt and innovate to bring more value, to have that continuous learning so that you're there for bringing, a higher value to, those that you're serving.
That's awesome. So, throughout your career, you've worn many hats, right? You've been a founder, a CEO, a chairman, an investment banker. Which of these would you say was your most challenging position to you personally, and why?
Yeah, PJ, it's a challenging question because I feel like I've done a lot in 35 years in different roles and capacities, and they've all been, kind of dots that now I can connect. But at the time, I had to experience a lot of different things. I think as a typical entrepreneur, I went into a lot of those positions not knowing completely how they were going to impact my life and how I was going to be able to benefit from those. The one that might stands out for me is probably the most challenging was when I started my own boutique investment bank. I had been raising money and doing mergers and acquisitions inside of the small and micro and emerging growth space. And I found that there weren't really focused investment bankers that were working on that lower quartile of the sector. They're largely looking for bigger deals and larger paydays. So I decided to go and create my own. And that required one, getting registered with the SEC, and back then the regulatory agency was called the NASD, now it's FINRA, and I had to be licensed. And so I had gone through the entire application process with the SEC, with NASD, and was approved conditionally upon the fact that I had never had a securities license. So then I had to go out and actually take the exams to get licensed. And I did that successfully, ended up holding 5 licenses, and built the investment bank, then learning about all of the criteria that went along with that, And the most challenging part of that was the regulatory component. And never having been in a regulatory kind of compliant nature of a small boutique investment bank, I really had to expand from going from a business builder and a manager and a visionary to then being focused on the details of regulatory and compliance, which was not my real passion nor strong suit.
You know, I'm going to challenge you a little bit about whether that was in fact the hardest part, right? So you shared the story, you decided, and I'd be very interested in understanding when you made the decision to pivot and why. Let's start there. Why did you decide to open a boutique investment firm? What were you doing up to that point, and what prompted you to say, you know what, I'm going to stop doing this and I'm going to go do that?
You know, it was a natural progression. So prior to that, I was doing a lot of advisory work, you know, working on business plans, helping companies raise money. I was an investor myself, putting money into deals, doing some mergers and acquisition. And a first client came to me and said, hey, we want to go public. Can you help us? I said, I don't know anything about that. I'm probably not your guy. He said, no, we trust you. We want you to go do this. Go learn what you need to learn. And so I studied the sector while they paid me, which was a great way to do that, for about a year, and saw this void in the market for licensed investment bankers that were working in this sector. And so during that year, I did a lot of work that typically a banker would do, but I wasn't licensed. And in order to do this legally and compliant, you need to hold a license, although many guys do this every day and don't. I wanted to be able to be operating, you know, with integrity, you know, within the confines of being a licensed broker dealer. And so that transition was kind of led, you know, as I think many things as I've done in my career, by opportunity set, going back to the fact that there was a big market there was an underserved aspect of that market with significant opportunities, quite honestly, to make a lot of money. And so those were all leading indicators to wanting to take the next level up and to grow into, you know, basically a position I had never done before.
Got you. So now I'm going to get back to the point that I made earlier, which is I'm going to challenge you on something. You said the hardest part there was the regulatory stuff. And I would say that the hardest part in any business is selling, getting the customers. So you've kind of skipped right past the part of how did you get customers? I mean, how easy was it for you to go over, you know, you'd pivoted, you'd been in business, you started businesses, you were successful at that. Suddenly you're doing something new. How did you get the business? And did you have any concerns that, you know, at any point were you feeling like you were an imposter, like you were doing something that you weren't qualified to do?
I think over my career or over my, even academically, I've had feelings like I was an imposter, right? And that kind of imposter syndrome, not here, Tal, because I was already clear that I was working in the space already. I just wasn't licensed. All of my business up until really the pandemic came from referrals and word of mouth and reputation. So, you know, I worked really hard to build relationships, to build a network, and to provide both, you know, value exchange, meaning I had mentored people, I would provide value, I would be mentored back in exchange. And so it really was, for me, a transition that wasn't very hard to get clients, to answer your question. It was really about providing a service in an underserved market, which I already knew. So, you know, if you add all those elements together, and during the time I ran it, I eventually sold it. The bank still operates on Wall Street, although they've changed their name. It was always based upon the principles that I have, which is, you know, create value, utilize your network, you know, drive the growth around making sure that you can serve, and I would say overperform in what it is you're promising to deliver for your clients.
Wow. So you have, first of all, kudos to you for getting paid to learn something. I think that's amazing. That's awesome. I want to sign up for that. But also, like, so you've done really, really well, right? And you've learned to kind of master all these the idiosyncrasies of what you need to do to be successful in the positions that you've had. But when you were first starting out, I am sure there were things that kept you up at night, that freaked the crap out of you, because you're a human, you're working your tail off. What were those, and what would you say today to that sleepless younger Peter, as a piece of advice?
I think for most entrepreneurs who have bootstrapped and built their companies, undercapitalization is one of the biggest issues that had historically kept me up, and I would say still drives a lot of the way I approach business. So, being able to balance the proper capital, understanding and owning the metrics and the assumptions about cash flow, and a scorecard, if you will, about how your business is performing. Those are pitfalls that I think I've seen over my career as an entrepreneur, as well as all the CEOs that I coach and I work with, who may not come from a CFO or a traditional kind of fiduciary. The founder mindset is always over the skis. Generalizing, but in my experience, that's the case. And that undercapitalization and thinking that you're going to be able to sell more, overcome all the problems, get there faster, it's a recurring cycle. At least it was for me. And then that coupled with being able to really adapt quickly, right? So, now I'm very nimble. I run a very nimble organization, and we move with market cycles very, very quickly. Because we maintain a low overhead, we look at those signals, we're proper capitalized, but we adjust ongoingly for the things that don't work the way that they're supposed to, which is constant, especially in the financial and the capital markets.
So it so happens this week I published a blog post on our website, bravingbusiness.com, on the very topic of when should an entrepreneur recognize that an idea they had is not going to work out and they need to pivot. And sometimes it's an entire idea, and other times it's just a component of, or a part of a plan. What advice would you give an entrepreneur that's not, perhaps they've been at something, it's not quite working out the way they'd like? What's something you look for to help you determine that it's time to pivot?
And I think, Tal, there's a distinction between pivot and quit, right? So it's not give up and it's not quit. And sometimes they're just nuances. I've witnessed a lot of market cycles. The biggest one, and this is where I got my hardest lessons, were in the Great Recession, 2009. I lost all of my money. I was in jumbo real estate in South Florida, residential real estate, and I was in the capital markets. Never in my history or ours had we seen both of those collapse at the same time. So having witnessed significant market cycles, ups and downs, there are a number of things that I could look at as indicators and ways to shift. For me now, because I work in capital markets in the IPO sector, those are usually bigger discussion items, meaning economic indicators, right? Currently, that would include the market sentiments. This is one of the worst IPO markets we've seen in 30 years. 2021 was one of the best we'd seen in 20 years. So it's easy to have markers to be able to compare those metrics. But without that, even I could say, look at valuation levels. Look at the obvious, which we're all facing, no matter what industry we're in: geopolitical, monetary issues, right? Interest rates. These are all big indicators. And then I think you can come all the way down to whatever business you're in. And the most important indicators, which I think a lot of entrepreneurs miss, is customer feedback and market feedback. Those are the greatest. If you're listening, that's where you can get the greatest input on those nuances of pivot, because they're usually being given to you before the problems actually show up in your business.
I think it's a great point. I'd like to call out our listeners to something that I did, and I think a lot of entrepreneurs do, which is finding rationalization for negative feedback from customers, either viewing a particular customer as a quote unquote complainer or someone who will never be happy, and or finding other explanations that are something other than something is fundamentally not working properly. So Peter, you just called that out. I agree with you. I think it's super critical for people to be prepared to accept feedback and see it for what it is, which is a gift, because it's an opportunity to correct course.
Yeah, agreed. And I think what happens, guilty as also myself in calling one out, is, we fall in love with our babies, right? And then you tend not to see some of the blemishes. And that's, I think, what happened, at least for me, when I was younger in my career. Now I seek them. I want to hear them. Because that's where the growth and the opportunity comes for that learning, for being able to accept the feedback, good and bad. And the most for me, I like the bad because it's critical and it allows me to learn and adapt. I go on the proactive. I go to my customers and our clients and I ask them, how are we doing? What could we do better? What worked? What didn't work? So on and so on, because that's where you're now soliciting the feedback. And I also like to give it. A lot of people will be upset or disappointed or something doesn't meet their expectations. They go away pissy, blah, 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 right? And then they'll go tell, what's the old adage, they'll tell 7 people and so on and so on. I like to give the feedback to whoever it is that I'm interacting with if something doesn't meet my expectations, with the hope that they'll learn from it. Doesn't always meet, that reality. But I do believe, Tal, that what you said, a lot of people want to justify, overstep, ignore, find reasons and circumstances that don't have them really focus on the core matter. And that core matter could be very significant in how your business performs.
Very, very interesting and very true, actually. So one of the things that you do is that you help private companies go public, but then also you mentioned that it's really hard to time markets. So how do you skate that line? Like how do you do that?
Well, I love that question because it's right in my wheelhouse. So I recently wrote my first book called The Entrepreneur's IPO, and it's a practical guide to preparing your company to go public. And whether you want to do an IPO or you don't, if you're operating your company as if you were public, you will go through the mechanisms to be able to create more value inherently for your organization and for all the shareholders and stakeholders of the company. So there's I don't believe in perfect market timing. What I do believe is in preparing for when the market is open for, let's say, either your exit, when that exit could be a trade sale, it could be a merger, an acquisition. In my case, I focus on taking companies into NASDAQ, New York Stock Exchange, or a new exchange called the CBOE. So the Chicago board has renewed itself. We're doing our first IPO there this week. So that takes a significant amount of time, of resources, of preparation, of education, and then ultimately of execution if and when the timing of the market and the conditions are ready for a company to enter into that, execution of their exit strategy.
So for our listeners or viewers who are perhaps setting their sights on going public at some point, I have never been part of a public company. I was a part of several companies that were courted for going public and opted against it. There are really good reasons to go public, and there are also some really good reasons not to go public. Can you share, maybe 1 or 2 key reasons for each? And clearly, you're in the business of helping people go public, but I don't assume that you necessarily are advocating that all companies should go public. What do you look for in helping someone to make a determination whether it is in fact the right thing for them?
Yeah. So first off, I try to talk people out of it because it's a very difficult and challenging, business to be in. It's almost like running 2 companies. You have your operating company and then the public company, and those are often, quite a challenge for any CEO. The reality is that 2 primary reasons to go public: access to capital and liquidity. And that liquidity is also a currency which can be used in the way of stock and stock options to attract employees, to attract, key partners, stakeholders, and even to use in mergers and acquisitions, which was I've taken 2 of my own companies public. So I've done that kind of missionary work early on in my career of understanding the pros and the cons. Those 2 are for sure the primary drivers. I would say the third one there that I like to add is the credibility that comes along with going through all of the rigor of being public and the transparency, and then having that credibility of a well-organized, well-governed public company. The downside is that It is, like I said, a separate business, requires a significant amount of resources to manage, the financial reporting, all of the transparency that comes along with having to report to your stakeholders and to the public. It's a real challenge, and requires then capital and human resources. The other is that I work with small to medium-sized companies, is that they're growing their business as they're public. So that puts extra strain on the company to be able to perform, to continue to grow, to meet, the demands of the market. So there are no doubt pros and cons. I am bullish on it. So clearly I'm on the side of going in earlier, but I would say I probably turn away more companies than we accept. And I try to talk every one of them into at least educating them to understand what's ahead of them, should they choose to go down this route.
Is there a common pitfall that you tend to talk to these CEOs about in regards to, warning them on the upcoming path? Is there something that you see, a commonality that you see where you're like, oh, okay, you guys should avoid this?
Well, the one that I like to joke about is, the bell doesn't ring itself. Meaning, the bell of opening up on a stock exchange, it just doesn't happen by itself. I'm going to a bell ringing this coming week, and it's a really exciting event, right? It's a pinnacle. It's why I love what I do. I think many entrepreneurs have that dream of being able to go to the NASDAQ or New York Stock Exchange, and it is a life, kind of long, for me, experience to be able to share with other people and be able to be a part of. One of the many pitfalls of there's the challenge of getting public, and many CEOs make the mistake of thinking that that's where they can cash in. Well, in reality, that's where the hard work begins, because now you've got to run your company as a public company, and you've got to meet the expectations of the market and the analysts and of the shareholders, and it's a lot of work. So there's no immediate payday. There's a lot of I think the misconception is that going public, you then can cash in your chips and, you're going to go live on a remote island somewhere. Just not the case.
I like remote
Yeah.
islands.
Well, we all like remote islands, but it is very interesting because there is this perception that, oh, I'm public and it's over. It's the very, 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 very beginning, right?
Yes.
For most entrepreneurs whose business goes public, there's there is some limitation on how much shares they can sell. That's also true for their team. And the amount of stock you sell as a CEO or founder is a metric that's viewed by some investors as an indication of your confidence in your business. So even if you've been able to go public and your company's now on the market, you have to be extremely careful about what you do with your equity. Because if you sell too much, it's going to potentially drive down your price, and it actually could expose you to lawsuits. So lots of pitfalls if you don't know what you're doing, and it's probably why people like Peter have a business, because you need to have a mature adult who's been there, done that at your side to help guide you through these things.
That's fascinating, because I can tell you from a layman's point of view, when we see the bell ringing, yeah, I truly think they're ready to leave, to get on a plane to go to that nice remote island. I mean, that's, you hear about everyone working their tail off just to sit by the pool, right? And drink the drinks with the fancy umbrellas in them. And it's interesting to hear how, when we see what is the quote unquote pinnacle of success for a company going IPO, right? That is that measure, that it really is just the beginning. Very cool.
Peter, let's pivot a little bit. Let's talk mentorship. So, how do you approach mentorship, whether it's at your own companies or in your personal life? And how important do you think that is to both mentor and be mentored?
Look, I think it's critical. What I found early on, I feel very, blessed in my life that I've had great mentors that I've met, and not even formally calling them mentors, right? A mentor could be a coach, it could be, an advisor, it could come in a lot of different, forms. What I would say, Tal, is that what I've found is the best way to learn is from someone who's already accomplished what you set out to do. So find someone who has had the experience prior, who can help you really kind of minimize the challenges, the pitfalls, maybe the mistakes, that are going to be made. I look at mentorship as a two-way street. I'm mentoring someone right now, and I feel like that as much as I'm contributing to their personal and professional development, it also enriches my experience. And I think that's one of the beauties of mentorship, is where it can drive, fresh perspectives that can lead towards not just business, but personal growth, and I think ultimately can lead to innovation. So there are a number of thoughts I have around mentorship. I have several that I work with now, as well as some coaches that I work with, because I really have a feeling from my own perspective that learning is continuous and lifelong, and I want to continue to excel as a human being, as well as a CEO, as well as adding value to kind of the world at large.
Very neat. So, oh, I'm sorry. Go ahead, Tal.
No, I was just going to say that's I think that's the right mindset, right? So I really liked that you pointed out that there's something to be gained from being the mentor, not just the person being mentored. And it's multidimensional. On the one hand, of course, you get the satisfaction of helping someone. On the other, if you're someone that's been in your career 20, 30 years or longer, being exposed to someone that is ready to be mentored, usually not always, but usually they're younger and just beginning their career, it's exposing you to a new way of thinking that you may not have been exposed to. So there are opportunities for self-growth as you mentor other people. And I have found that to be one of the most satisfying things in mentoring college students, is being able to engage and counter to the popular narrative that Generation Z is lazy or unwilling to take risks. I'm finding them to be incredibly creative and quite resilient, surprisingly so.
Yeah.
Yeah, Tal, I think it's interesting when you talk about college, like, I will do it again this summer. I did it last. We had 2 interns last summer, and I was challenged by how sharp and how hungry and how I would say really sophisticated they were in comparison to what I was in my 20s. And it really sharpened me up, in a sense, to know that I'm working with these crisp young minds, right, that are going to challenge. They're not just going to accept what I'm saying. They're going to challenge. And from there was kind of that dynamic you're talking about. It was a fresh perspective. It led to a knowledge base for them and resume building, and hopefully, puts them in a track that they're pursuing in their career, opening up some new doors, right, for connections and so on. But that kind of driver of working with, whether it's younger and quite honestly older, we just brought on someone to our team who's 87 years old, who's not only on my team, but he mentors me while I'm teaching him about the nuances of this current market. And so it can go both ways, right? So I've gone the span of 20 something right now up to, 87, and find that enrichment in both sides when it really is a mutually desired, right? When there's good intentions in really adding value and supportive, enriching, teaching moments. Because, what's the old adage? The best way to learn is to teach. And I love the ability to do that. That's why I wrote this current book, and I'm writing another one, because I want to be able to share that, with people. Because I didn't have, for example, I advise now, we probably have 20 CEOs that we work with. I didn't have that advisory experience or the mentor when I took my first company public. I learned so many lessons the hard way. And so I'm trying now to also be able to kind of pay back, right, and pay it forward, which is what I think a big portion of mentoring is.
I actually have a question for both of you, because mentoring is something that we've touched on quite a few times in the old Braving Business podcast, because it's important, right? So I'm posing this to both of you guys. When you were, first of all, when did you first look for a mentor? And, when you realized, hey, maybe I don't know all the answers, and I need a little help. And how did you go about finding it? That person?
Peter, you go first.
PJ, I don't think I knew that I was looking for a mentor. I certainly didn't call it a mentor. Back then, when I think about it, I was in my early 20s. I had people that I worked for that I looked up to and I respected, and I admired how they had reached into a higher level of success than I did. And I wanted to tap into that. Right. So, and that theme has gone forward for me. It's a really interesting question. Like, how do you approach asking for someone to be your mentor? And I think ultimately, if you take the word out of it, it's how do you approach somebody who you look up towards, you respect, who has a knowledge base. And I think the real simple answer to me is to be very humble and to ask, because I think most people by human nature would like to contribute back. And it's an opportunity. I love when I'm asked. I don't always say yes, but I love when I ask because it's an opportunity to contribute.
Well, my answer, and that's a great answer, I can be very specific. How specific would you like me to be, PJ?
Oh my gosh. Go get deep, my brother.
Get deep. All right. Well, I can tell you that it was June 20th, 2003. And let me tell you why I know that.
Yeah, that's pretty deep.
I know that because over my desk, there's a reason I'm looking up, is a plaque of an article, journal profile from the Washington Business Journal of me in June 20th, 2003. It's called Evolution of a Salesman. You can still find it online if you want to search for it. And in that profile, I mentioned an author by the name of Michael Maccabee, who I was a big fan of, whose book I read and whose input I found valuable. His office reached out to me. He was in his 80s then. And he invited me for a meeting. At the time, I didn't have a mentor, and frankly, I didn't think I needed one. I was arrogant, and I had success and had not quite fallen on my ass yet, right? Michael Maccabee was my mentor, and for the next couple of years, we met typically once a week, sometimes every other week. It took me, frankly, years later to fully appreciate what a gift it was that he gave me. So I look for opportunities to mentor because experience like that is life altering for someone who's fortunate enough to be able to speak to someone willing to give them, a share of their wisdom. I am nowhere near as wise as Michael Maccabee was. He's look him up. He had achieved amazing things in his career. But I do my best to share whatever it is that I do know with people that ask. So thank you, PJ, for asking me that question. And this should be Peter's show, but okay, all right, we'll go with that. Peter, we're going to pivot and ask you a question about something you didn't do, but you wanted to. You considered a joint venture with something called the Conscious Acquisition Company, where the objective was to bring capital into the field of psychedelic medicine. Eventually, that didn't happen. The sector and capital shifted, as I understand it. Tell us what lessons there were in that for you, and maybe what lessons can our audience take about taking risks like that, and maybe also recognizing when it's wiser to pull back.
This was an interesting learning. This was really an opportunity that I sought out, that I found a venture capital fund that was looking to deploy capital in the early stages when psychedelic medicine was coming onto the market. So this is about 4 or 5 years ago now. And I think, like many entrepreneurs who are early pioneers, if you will, you're carving new territory. And we were looking to build a special purpose acquisition company, or a SPAC as they're called, in Canada as a mini SPAC, meaning we were only going to do, I think, $10 million, where most SPACs were, 10 times that. And we were working with an exchange to create a new product in this kind of mini SPAC to serve a new field that was emerging in the psychedelic medicine. So we had two kind of firsts going on side by side. And I was very bullish on it. I took all of my background experience in the capital markets and as an entrepreneur, in an area that I believe and still believe in is making a significant contribution, to the world. And so was some passion there, which is part of the lesson, is don't let the passion blind you into looking at the realities of the market. The other were that, we took a very clear position. We were going in early. We worked with the exchange, we worked with regulators to try to create a financial product that didn't yet exist in its form on this exchange in Canada. And it turned out that two things happened. Number one, the market sentiment shifted from when we started, because this took a period of probably close to a year to get through all the regulatory components of building this financial product. And at the same time, a lot of the companies that were early in the space did not perform well in the public markets. So the regulatory side dried up while the capital dried up, and opportunities then kind of really disappeared that were looking very bullish. And since then, of course, the sector has gone through some significant changes. Many of those companies have thrived. Many of them have failed. So in some ways, I dodged a bullet in the sense that we did not put ourselves or investors' capital at risk in a sector that was still early on and in a stage of development. The other ways I learned and grew from trying to go out and do something way ahead of my time that hadn't really been done before, and took those lessons as one of connecting the dots to help understand how the capital markets work better from going to market direct with a company as opposed to trying to do a special acquisition company. So there's a lot of lessons learned from failure. I'm a big believer that hardship and failure are some of the best educators, and I've had my share of those, right? I could talk to you guys for days about all the lessons learned, not just from that particular example, but from all the different things that I've tried as an entrepreneur that haven't worked, that then later on shape the next actions that I take inside of my growth and development as a CEO and a leader.
That's awesome. First of all, I have just a quick question in regards to what drew you to that particular market. Is it just because it was, quote unquote, untapped, or, were you just looking for a good place to buy some cheap mushrooms? I don't know. Like, what was the
or both? It's interesting. I have some very close relationships that suffer from anxiety specifically, and I've undergone treatments for anxiety with the use of psychedelics, and so I've seen firsthand the benefit from people who are struggling with some different aspects of mental health, challenges and disorders, and using a plant-based approach, which to me is much more attractive than the other alternatives that are out there. And then if you couple all of the science and the developments that are happening in that sector, and the contribution really to, this is pre-pandemic, right? So, now all of what we know, of course, is the challenges that are happening, with mental health as a component, and I think it really was accelerated by the pandemic. But there are a lot of people suffering in the world from something that can be benefited by plant-based, treatment and alternatives. And I've also been able to benefit from some of that myself. I'm a believer in it. I like to be able to support entrepreneurs who are doing something good in the world while there's still a capitalistic approach to it, right? So it's doing good and for profit. Specifically I have had, very close relationships of mine, had some very, I would say, life correcting treatments coming out of plant-based therapies.
I'd be remiss, given our podcast, to not ask a couple more questions about that. You just shared with us, which I appreciate, that you chose to engage in some of that to deal with issues that you had, and you certainly don't need to take us into what they were. But I love that came up, because frankly, this conversation with you has often been about what's gone well, and you are incredibly wise, and you've accomplished enormous things. And you sharing that may make you more accessible for most people, more so than hearing about your successes. So without getting into anything you don't want to talk about, share what, this, how is it that despite this great success you were having and all these wonderful things you were doing, something still led you to be seeking? And I don't know what it was that you were seeking or what it was that you were feeling, but something didn't feel right. What can you tell us about that?
Well, I think it goes back, Tal, a little bit to, I had very significant hardship in 2008, 2009, which I'd never experienced before in my life, where I lost everything. This was, the most material time of my life, and it led to all kinds of related issues, but it started off with financial loss. And so that period coming out of that, that was a very dark period for me, going from a high level of success to basically losing everything and then some. And so rebuilding myself, both mentally, physically, and really recreating who I want to be as an individual, personally and professionally, was coming out of that hardship period. And a portion of that is just to be able to have some self-awareness around who I am, what works, what doesn't work. And, those teaching moments, I think that came out of the Great Recession when I lost everything, were part of what would led me towards a path of alternatives and finding ways to be able to help to balance out, both my mindset, my goals, my ambitions, and some of the challenges that come along with hardship.
I thank you so much for sharing that. I frankly, I did not know that you had that setback. And as I've shared on the podcast, I built my last substantial startup into a very successful company. Brought in capital from big Wall Street firms, and then the company suffered a terrible setback, which cost me my entire fortune, and set me back to the starting line, and not as a child. My next startup failed. And frankly, I'm currently embarking on the next startup after that. And one thing I'm dealing with is the anxiety of, oh my gosh, what if I fail again? I had not failed before. I'd had some failures very, very early on in my careers. Of course, I've had setbacks, but not outright failures. And then this. Where did you find the courage to start again?
I never saw that failing was an option. And so starting over, I think one of the beauties of being a serial entrepreneur is knowing that if you've done it before, you can do it again. And you're going to, you knock me down, I'm going to be resilient, I'm going to come back. And in this case, Tal, there's some inner motivation, that drives that. It's beyond resilience. So kind of, I'm a student of anti-fragile, which is really more about how do you not just overcome hardship, but how do you thrive? And so it's inherent, it's internal. I can't tell you exactly where it comes from. My interesting on a personal note, my mother was a Holocaust survivor. And so we have been talking of recent, she's 94, and we were talking about how that's part of my genetic kind of makeup. She overcame resilience her entire life. We never talked a lot about it in our family, but I've learned that that is part of my makeup in my value set and my approach. I'm also, the harder you knock me down, the harder I'm going to work to come back, right? So, what's the average? I think it's entrepreneurs, if you look at Napoleon Hill and some of the studies, it's like entrepreneurs have 2.5 failures in their career, right? So, those components of being able to know that I've had success, made mistakes, some I can control, some I can't control, but what I know I can do is recreate myself, adapt, become more than resilient to thrive again, and find my way to recreate a model that now takes all of those lessons learned and puts them into effect in whatever's next.
That's
Wise words.
Yeah. Thank you for sharing that.
Yeah. I mean, not easy, I'll tell you. I mean, everything you said, I agree with. And yet, I found myself recently, staring into the ceiling in the middle of the night, And my girlfriend noticed it and asked me what was going on. And I said, I'm afraid of failing again. I don't want to fail again. Being able to name it, being able to say I was afraid, that felt like a breakthrough. I don't think I would have been able to do that some years back. I don't think I would have actually shared that I was afraid. And the fear is okay. Obviously, the question is, what do you do with it? I'm using it to motivate me as opposed to paralyze me.
Yeah, I have some thoughts, Tal.
Yeah, I'd love to hear them. I'm sure our audience would too.
And this is an article I recently wrote for entrepreneur.com about embracing uncertainty. And I think, entrepreneurs and uncertainty, they're hand in hand. It's really the two sides of the coin. Embracing it is just really being at peace. Like you said, own it. Okay, I'm fearful of X. Well, the ability to kind of accept that and continue to go forward, right? So the more you can embrace that uncertainty, and it's ongoing. Some uncertainty is planned. You're planning your next launch. Some is unplanned, pandemic, geopolitical, like there's stuff that we just can't control. But then out of that comes the ability for personal growth, for new leadership styles, for innovation. So I'm a big believer that embracing that and owning it can really have you grow to the next level.
Very, very cool. Very cool. It's first of all, I love how vulnerable you have been during this. So thank you for sharing that. And it's been a pleasure. It's been a pleasure really learning more about you and also just delving into all the layers of this onion of entrepreneur life that we have. I really appreciate it. So folks, our guest today was Mr. Peter Goldstein, entrepreneur, contributor to pretty much the world at bay as they want to launch IPOs, chief executive officer of Grandview Capital Partners, and just a fantastic human being. Thank you so much for being a part. If people want to reach out to you, follow their IPO dreams, what's the best way for them to reach you?
Easiest way is just connect with me on LinkedIn. I put out a lot of content around IPOs, about thought leadership, entrepreneurship, and I'm happy to connect with anybody there. I also want to offer to the audience, if you want a copy of my book, just direct message me and we'll arrange to get a book to you. If you're pursuing an IPO, I think it's a very valuable resource, and one that I hope, even if you're not pursuing an IPO, you learn from how to benefit your organization going forward. So reach out for me on LinkedIn, and I'm more than happy to connect and even have a phone call to follow up.
And we will have Peter's LinkedIn profile in the show notes. So if you're listening or watching on YouTube, just click on the show notes and you'll be able to find him there. Peter Goldstein, thank you so very much for being with us today. Continued success to you, and continue braving it.
Thanks, guys. Thanks to all.
Thank you so much.